The conference room of Anderson Capital Partners hummed with the confident energy of men who'd never faced real failure. My brother-in-law, Michael Anderson, stood at the head of the table, his custom Tom Ford suit and Patek Philippe watch screaming old money confidence. "And that concludes our investment strategy for Q3, he announced to the board, earning appreciative nods from the other members. "Any questions?" I glanced down at my analysis, weeks of research showing dangerous patterns in their investment portfolio, red flags that nobody else seemed to notice. Or perhaps they just didn't want to notice. Actually, I raised my hand, earning barely concealed eye rolls from several board members. The derivatives exposure in the Asian markets dash. Sarah, Michael interrupted, using that condescending tone he'd perfected since marrying my sister Emma. "Let's stick to basic numbers, shall we? Leave the complex market analysis to those of us who do this for a living." The fact that I ran Phoenix Investment Group, one of the most successful hedge funds in the country, was apparently irrelevant. To them, I was just Emma's little sister, the one with the cute financial analysis hobby. "The numbers are basic," I persisted, pulling up my research. "Your exposure to the Shanghai market alone is well within acceptable parameters," Charles Winchester, the CFO, cut in. "We've been managing these portfolios since before you were playing with calculators." My phone buzzed discreetly. A message from Marcus, my head of operations. "Position acquired. We now control 28% of Anderson's underlying debt through shell companies. Proceed with phase 2. I typed back, "Hold. Let's watch them dig deeper." "Perhaps Sarah has a point," Emma offered weakly, earning a sharp look from her husband. My sister, once a brilliant financial analyst herself, had gradually dimmed her light to match Michael's expectations of a proper Anderson wife. "Darling," Michael's voice carried that warning tone I'd grown to hate. "Your sister's concerns, while adorable, aren't relevant to our strategy. We're on track for record profits this quarter." If they only knew that those record profits were built on financial quicksand. That their complex derivative positions were about to collapse like a house of cards. That Phoenix Investment Group had been quietly positioning itself to pick up the pieces. "The market indicators I tried one last time. Are perfectly aligned with our projections," Michael declared firmly. "Now, unless anyone has questions about actual business matters, I believe we're done here." The board members gathered their things, their expressions making it clear that my presence was merely tolerated because of family obligations. Michael had only invited me to these meetings because Emma had insisted, and even then, it was probably just to showcase his supposed superiority. "Sarah," he called as I headed for the door. "While I appreciate your enthusiasm, perhaps stick to the junior analyst reports next time. Leave the strategy to those who understand it." I smiled, thinking of the documents waiting in my office. Analysis showing exactly how and when Anderson Capital would implode. "Of course, Michael. Though you might want to hedge those Asian positions." He laughed, the sound echoing off the mahogany panels. "Still stuck on that? The Asian markets are solid. Our models show Your models are outdated," I said quietly. "And your assumptions are dangerous." "Dangerous?" Charles scoffed from across the room. "We've been using these models for 20 years. And when was the last time you updated them for modern market dynamics?" Michael's face darkened slightly. "I think we're done here. Emma, dinner at 7? That new French place." My sister nodded dutifully, avoiding my eyes. She knew I was right. Her own financial acumen, though buried under years of spousal expectations, was still sharp enough to see the risks. My phone buzzed again. "Marcus, Shanghai markets showing early stress signs. Anderson's positions are exactly where we predicted. Timeline moved up." I looked at Michael, still basking in his perceived victory, still certain of his infallibility. "No," I typed back. "Let them feel secure. The crash will be more educational that way." Outside, the financial district gleamed in the afternoon sun. My driver held the door of my modest sedan, not the flashy sports cars the Anderson executives preferred, but perfect for staying under their radar. "To the office," I instructed, thinking about the mechanisms already in motion. Phoenix had spent months preparing for Anderson Capital's inevitable collapse, quietly acquiring their debt, positioning ourselves to take control when their house of cards finally fell. Emma called as I reached my office. "So, about the meeting. You saw it too, didn't you?" I asked. The flaws in their models. A long pause. Michael says you're just being negative. That you're jealous of their success. I logged into my trading platform watching the early warning indicators flash red. 3 months, M. Give it 3 months and we'll see who understands success. The next 6 weeks transformed Anderson Capital's record profits into a masterclass in hubris. I watched from my real office, the command center of Phoenix Investment Group, as their empire began its inevitable crumble. The first cracks appeared exactly where I'd predicted. The Shanghai market started showing stress fractures, subtle at first, but growing more pronounced by the day. Anderson's derivative positions, built on outdated models and dangerous assumptions, began to bleed money. Michaels called an emergency board meeting. Emma texted one morning. Something about temporary market fluctuations. I pulled up the real-time trading data on my wall of screens. Temporary was optimistic. Anderson's main investment fund had lost 15% in 3 days, and the worst was yet to come. Sarah, my chief risk officer, entered with the latest reports. Their margin calls are starting. The banks are getting nervous about their leverage ratios. And our positions? We now control 42% of their debt through various subsidiaries. The banks don't realize all the holding companies lead back to Phoenix. My phone lit up with another message from Emma. Michael's saying it's just a short-term correction. That the models show everything stabilizing. Those models. The same outdated algorithms they'd refused to update, the same flawed assumptions they'd mocked me for questioning. Now they were about to learn an expensive lesson in modern market dynamics. Sarah, I turned to my risk officer. Initiate phase 3. It's time to start calling in those loans. The next board meeting was considerably less confident than the last. Michael's Tom Ford suit looked slightly rumpled, his Patek Philippe conspicuously absent, probably already sold to cover personal margin calls. These market movements are unprecedented, Charles insisted, though his voice lacked its usual certainty. None of our models predicted dash. Actually, I interrupted quietly, some models did predict this. 3 months ago, in fact. The room fell silent. Michael's face flushed dark red. If you're here to gloat dash. I'm here as a major creditor, I corrected him, enjoying how his eyes widened. Phoenix Investment Group holds a significant portion of Anderson Capital's debt. We're concerned about your ability to meet obligations. Phoenix. Charles whispered. The hedge fund that's been buying distressed assets across Asia? The same, I confirmed, pulling out a folder of documents. We've been watching Anderson's positions for months. Your exposure to the Shanghai market alone has created a liability that exceeds your total assets. Emma's coffee cup clattered against its saucer. Sarah, you knew this would happen? I tried to warn you, I reminded them. Multiple times. But complex market analysis was beneath your consideration, wasn't it, Michael? He lunged forward, face contorted. You orchestrated this. You're deliberately tanking our positions. The markets did that all on their own, I replied calmly. I just understood the mechanics better than your 20-year-old models. Now about those loan covenants. The next hour was a detailed dissection of Anderson Capital's imminent collapse. Every flaw I'd identified, every risk they'd dismissed, laid bare in stark financial terms. The board members grew paler with each revelation. This is impossible, Charles muttered, staring at the numbers. We can't be this exposed. Your derivatives positions are underwater by $3 billion, I explained. Your hedge positions have failed. And your main trading algorithm is still using volatility assumptions from 2008. Michael slumped in his chair, his arrogance finally cracking. The clients are already leaving, I finished for him. Word's out about Anderson's liquidity problems. The smart money started moving last week. Emma sat quietly, tears in her eyes. I felt for her watching her husband's empire collapse, realizing she'd suppressed her own financial instincts for his ego. There must be something. Michael's voice had lost its condescending tone, replaced by desperate pleading. A capital injection, a merger. Actually, I smiled, pulling out another document. Phoenix is prepared to make an offer. Though you might find the terms basic enough to understand. The final collapse of Anderson Capital Partners played out like a financial tragedy in 3 acts. I watched from Phoenix's trading floor as 15 years of arrogance and mismanagement imploded in spectacular fashion. Financial news channels ran constant coverage. Anderson Capital faces catastrophic losses. Phoenix Investment Group emerges as key player in Anderson takeover. From warning to windfall. The analyst who predicted Anderson's fall. Michael's carefully constructed world crumbled with each market tick. His investors fled in droves, his trading algorithms failed spectacularly, and his precious models finally revealed their fatal flaws. The final numbers are in, Sarah reported, bringing the death certificate of Anderson Capital in spreadsheet form. Total losses exceed $5 billion. Their main fund is down 87%. I studied the figures, thinking of all the warnings they'd ignored. And our offer? $1 for the company, assumption of specific liabilities and a complete management overhaul. She paused. Michael's requesting a meeting. Says he has alternative proposals. I checked the trading screens showing Anderson's final descent. Let him come. Some lessons are best learned in person. He arrived looking nothing like the polished executive who'd dismissed my analysis months ago. His suit was wrinkled, his eyes haunted, his swagger replaced by desperate humility. Sarah, he began, his voice hoarse, about your warnings. A bit late for that, I noted, gesturing to the screens showing his company's collapse. The time for warnings was 3 months ago. Now it's time for consequences. We can still save it, he insisted. With Phoenix's backing, a proper capital injection dash. You mean like the capital injection you mocked as basic numbers? I pulled up my original analysis. Every scenario I outlined, every risk I identified, played out exactly as predicted. Your models failed. Your assumptions crumbled. Your arrogance cost your investors billions. Emma appeared in the doorway, her own transformation evident. Gone was the submissive Anderson wife, replaced by the sharp financial analyst she'd once been. The board has reviewed Phoenix's offer, she announced. They're prepared to accept. Michael spun to face her. You can't be serious. $1. Our company is worth dash. Was worth, she corrected him. Past tense. Now it's worth exactly what Sarah's offering. $1 and salvation from complete bankruptcy. The next few weeks brought massive changes. Phoenix absorbed Anderson Capital's viable assets, restructured its toxic positions, and implemented modern risk management systems. The employees who'd snickered at my basic analysis found themselves reporting to my risk management team. Charles, the once proud CFO, cleared out his office, his models and assumptions relegated to business school case studies on hubris. The board members who dismissed my warnings faced their own investors' wrath. Michael? He finally learned the lesson he'd refused to hear 3 months ago. You knew, he said quietly during the final paperwork signing. You tried to tell us and we were too proud to listen, I finished for him. Too convinced of your own infallibility to see the changing markets. Emma thrived in the aftermath. Phoenix appointed her head of risk assessment, her suppressed talents finally finding expression. She filed for divorce the same day she accepted the position. 6 months later, I hosted a different kind of investment meeting. The same boardroom that had witnessed Michael's mockery now served as a classroom of sorts. Young analysts, including many from the old Anderson team, learned about modern market dynamics and the dangers of outdated assumptions. The markets don't care about your pedigree, I told them, standing where Michael once stood. They don't respect your family name or your expensive watch. They only respect understanding and adaptation. The Phoenix-Anderson merger became a business school case study in both market dynamics and personal hubris. Michael's dismissal of basic numbers was quoted in textbooks as a warning against arrogance in finance. 1 year later, during a global investment conference, a young analyst asked me the question everyone had wondered. Why offer exactly $1? Why not just let them fail completely? I showed her my original analysis from that ignored board meeting. Because sometimes the best lessons cost exactly what people think they're worth. Michael valued my analysis at nothing. So I valued his company at nearly nothing. The family dynamics shifted permanently. Holiday dinners were no longer dominated by Michael's financial boasting. Instead, Emma led discussions about market trends and risk assessment, her expertise finally respected. I kept the presentation from that fateful board meeting, framed on my office wall. A reminder that success in finance isn't about models and assumptions, it's about understanding and respect for market realities. Sometimes, late at night on the trading floor, I'd pull up those old Anderson algorithms, studying their flaws like a forensic investigator. Each failed assumption, each outdated parameter told the story of pride before the fall. The dollar bill I used to buy Anderson Capital hangs framed in our main conference room. Below it, a simple inscription: the cost of ignoring basic numbers. Because in the end, financial success isn't about complex models or impressive titles. It's about understanding fundamentals, respecting market dynamics, and having the courage to speak truth to power, even when they mock you for it. And sometimes the sweetest victory isn't in watching a company collapse. It's in rebuilding something better from its ruins. Something built on understanding rather than arrogance, on analysis rather than assumptions. Emma now leads our Asian markets division, her natural talents flourishing in an environment that values insight over ego. Michael, last I heard, he was teaching basic finance at a community college, a fitting epilogue for someone who'd dismissed basic numbers. The markets continue their eternal dance, caring nothing for human pride or prejudice. Every day, new analysts join Phoenix, learning the lesson that cost Anderson Capital everything. In finance, there's no such thing as basic numbers. There's only correct analysis and costly assumptions. And in the end, the price of ignoring clear warnings often comes to exactly $1. The cost of learning that true financial wisdom lies not in complex models or expensive suits, but in the willingness to listen when someone shows you the basic truth you're too proud to see.